Let's stick to earnings now and the IT space. It was a stable quarter for Zensar Technologies. Profits for the quarter grew 9.6% to $11.4 million, while margins saw a healthy trend as well. To discuss the quarter gone by, joining me now is Sandeep Kishore. He's MD and CEO at Zensar Technologies. Good morning, Mr. Kishore. It's good to have you on the show. Let's start off with the margin growth and the key highlights for the quarter itself. Your EBITDA margin as a portion of revenue has grown by around 100 basis points at 14% now. And if you talk about the EBIT, that has gone from 11.4 to 12.7%. What have been the key drivers for this quarter?
Yes, so it has been a good quarter for us, and revenue grew by 3.1% on the reported dollar terms, 2.6% on the constant currency, and as you mentioned, the profit has also, both at EBITDA level, which is the operating margin, as well as the profit after tax, did quite well. And there are a few key elements in that. Number one is obviously the focus on digital. Number two is the focus on our top 20 account, which you will see has remained stable at about 56% of our overall business. So our strategy for the top tier account, which have high headroom to grow, particularly in and around digital, has been working quite well. Other way is the application services, which is where large part of our digital services are reported. That grew quite ahead of the overall company growth. It grew by about 4.5% sequentially on the constant currency. So, quite ahead of the overall growth of the company. We are also changing the mix in our core infrastructure services business more towards infrastructure as a service, platform as a service, and obviously linked to cloud. Operational excellence has played a pretty critical role in us to get back to the margin trend that we have reported here. So overall, it's been a good quarter for us.
Right. Mr. Kishore, since you spoke about the revenues from the top 15 or top 20 clients, your revenue from the top 5 clients has been mostly stable, but it has gone down a bit on a sequential basis. From the top 10 clients has come down to 45.7 from 45.9, and the top 20 clients has also seen a very slight moderation. Any concerns that you are seeing as far as the top 20 client bucket is concerned in terms of client spends and in terms of discretionary spends there?
No, so I think it's been quite stable. As I mentioned earlier, those, couple of basis point up and down on a quarterly basis happens because of seasonal adjustment and also because of the budgeting cycle of these customers. Not all the customers have the traditional budgeting cycle of the quarter end, the way we end our quarter, and some budgets move between quarters. So no, we are not concerned at all on the top 20 customers. What we are, however, certainly seeing that these customers, and they are all large global organizations, are spending a lot of their investment in changing the business, which are all digital led. And hence our strategy around return on digital, which has been the key pivotal element, and we've talked about it earlier as well, is aligned to where the customer investments are. And they are a mix of discretionary spend as well as the run the business here. And that is turning more and more towards discretionary because these are large digital initiative, digital transformation programs which we are seeing. And you've seen the uptick on the business in 2 of our core businesses, which is manufacturing, that's more than half of our business, as well as retail and consumer services, that's about 22% of our business. So combined these two, it's about 73-74% of our total business. And digital plays quite a significant role into these businesses. And we feel pretty good based on our solutions which we have put. Also the strategy from client mining, client partner, as well as delivery excellence program that we have put together on these high growth accounts.
Right. Mr. Kishore, speaking about client addition itself, you've added 21 new clients in the quarter. But as far as your repeat business is concerned, that has gone down from 85% to 77%. And your number of active clients, that has gone down from 194 to 183. Is this a part of a conscious strategy to prune down non-accretive clients and then continue with a smaller client base, but that keeps giving you more accretive traction at the operation level?
Absolutely, yes. I mean, when I came on board and joined as a CEO MD about 6 months ago, one of the biggest focus which we are driving in our company is consolidation of account. We want to work with accounts where we can truly add value in and around digital initiatives. And you've seen 2 successive quarters where we have pruned down account. The previous quarter we reduced 17 accounts. This quarter we've reduced 11. So over the last 2 quarters we've actually reduced 28 accounts where, we felt after a lot of analysis that headroom for us to grow is rather limited. Also the value which we can deliver to the customer in around core strategy, around analytics, around digital, around cloud, customer experience, user interfaces are not there, and hence it is a part of a very conscious strategy that we want to work with fewer customers and want to give them a surround strategy of multiple services, application as well as infrastructure services. So it's a very well thought out strategy for us.
And is this why the repeat business portion has also shown a downtick in this quarter?
So repeat business, what we are doing as part of the strategy, we have a dedicated farming team, which of course is aligned to the top tier of accounts where the growth availability is higher. Also, we are working on a very conscious hunting strategy to onboard newer customers. And we really want to work with the global 1,000 companies in our chosen geography, which is US, of course, UK and South Africa. And the dedicated hunting team has just started to get into action, and our revenue contribution from the new account, you will see an upward trend into them as well. So that also is a part of a very conscious go-to-market strategy around return on digital with a chosen set of account in those geographies which I mentioned.
Right. Let's talk about utilization rates also then, Mr. Kishore. It is at around 79.8%. What has been the level? I mean, are you happy with this level? Because it has shown a down clip of around 1.2 odd percent.
Yeah, so we've been maintaining about 80%. You would see that as a continuous trend over the last couple of quarters, and it took a little bit of dip this quarter because some ramp up which was planned particularly for our financial services customer has been delayed to the next quarter, and it'll come back up. So no, I'm not concerned about the utilization. We will maintain a pretty healthy utilization within our company.
Right. And what about attrition? I mean, is there some wage hike that you have undertaken in this quarter? Would you like to update us about that? Because attrition has spiked to 17.6 as opposed to only 16% in the previous quarter. Do those levels worry you at this point?
So it's in the range. If you see the year-on-year impact on profitability for the full year perspective, yes, there is a wage impact which has already been taken in. We've given about between 7.5% to 8% wage increase, to our employees here in India, and that's been factored in the YOY numbers that you see currently. Attrition also is in the ballpark. I mean, it's gone up, but we are doing a lot of initiatives for both the skill development. We've launched actually a digital training academy for our company where there are 5 levels of training, and we've seen phenomenal participation from Zensarians around the world. We are spending a lot of time into training, particularly across multiple services in cloud and digital. So we do hope that the attrition will be in pretty much around the industry norm.
Right. Let's talk about the geography-wise split then, Mr. Kishore. US has seen a downtick in terms of the overall revenue pie. Factors behind that?
So 2 factors. Number 1, you actually see US marginally down. It's about 0.6% sequentially down on a constant currency basis. And that's largely led by the financial services. As I was mentioning earlier, there is some delay in the ramp up of the financial services client, number 1. Number 2, we are changing the mix in our core infrastructure business, more towards cloud, more towards platform and infrastructure services, and less towards both product and system integration business, which was earlier being a part of our whole IMS stack. That's been the reason why you've seen a little bit of softness. I think the good news is that the 2 core business for us, which is manufacturing and retail consumer, has seen good uptake. We've signed some 3 big accounts on the infrastructure business in the last quarter. So I do hope that, the ramp up on those accounts will happen, and, US should come back up.
Right. In terms of your European share, it's almost 10.5% of the overall revenues for the quarter. I understand that there has been no impact as far as the Brexit is concerned, or not a big impact as of now. But going ahead, I mean, is there any clarity from the client side in terms of spends or commitment towards spends? Have you heard anything from those quarters?
Yes, it should be on.
So previous quarter, no, we've not seen any Brexit impact. Our European business actually grew ahead of the company overall business, about 2.7% on the constant currency. But Europe number for us, as you mentioned, is about 10%. So it's not a very large part of our business. Now we're working very, very closely with every single of our customer. Majority of them are in the financial services and in the retail sector. And each customer has its own dynamics. And we are watching that very closely, working collaboratively with our clients, every single one of them. And just to make sure that we are aligned both on their discretionary spend as well as the run the business spend. There has been some softness in a few of our financial services customer on the ramp up in UK, but I do expect that that should come back up as the strategy for them becomes more clearer. We are working very, very closely with them.
Right. Let's also talk about the industry-wise split then, Mr. Kishore. As far as the manufacturing and the retail segments are concerned, they've shown a moderate bump up. But your financial services, obviously, as reasons attributed by you, and the emerging segment, that's shown a downtick of around 8% odd. Any thoughts there?
So emerging is a very small part of our business. It's just about 5% of our business here. So no, our focus clearly has been on the three markets that as a part of our strategy we are going after. One is of course manufacturing, with more than half of our business. Retail and consumer, largely driven by digital and the whole B2C space. Manufacturing we are actually also seeing, and the reason you've seen the uptake is because there is a lot of B2B initiatives which have started in and around analytics and in and around commerce activity. Financial services has seen some softness of the reason that I mentioned. There is a little bit of Brexit there, not much, but some ramp up in the US financial services customers which moved to the subsequent quarter here. So that's been the overall approach for us. Our focus on the top tier account across these three business segments industry continues, and that's exactly where we are investing in our client-facing team, in our delivery team, and of course in our solutionings. There are several solutions which we have launched around IoT, around robotics process automation, particularly for our financial services customer, smart retailing for our retail accounts there, IoT and this whole virtual reality for IoT for the industrial customers which are in our manufacturing business, as well as in the consumer segment as well. So we feel pretty good about the investment that we've done in and around digital, which is a part of our return on digital framework. And over a period of time, you will start to see impact with our customers' conversation up, our deal pipeline up, and of course our wins.
Point taken, Mr. Kishore. Thank you so much for sparing the time and spending some time with us to decode your quarterly earnings as also the outlook going ahead. That was the management of Zensar Technologies. Well, on that note, we are completely out of time on this edition of In Business. Thank you so much for watching.